Do you ever wonder how real estate investors make millions of dollars but pay little to no taxes? Donald Trump, for example. It's not a scam, it's just using the tax code. Now, the wealthy use real estate to legally wipe out their tax bills, and today, I'm going to show you exactly how you can do it too. Now, I want to start this video by saying, over the last few years, I think regardless of political belief, we can all agree that the government's use of our tax dollars is just not optimal. Now, it's the responsibility for all of us as citizens to pay our taxes by law, but it's not our responsibility to pay too much in tax. And Ben Franklin once said that the avoidance of tax is the only intellectual pursuit that carries any reward. How's it going? My name is Eric, and I've been a tax strategist and financial accountant for the past 13 years. Now, with all the recent advancements in artificial intelligence and honestly the really weird political timeline that we're living in, I figured it's time for me to reveal all of the tax strategy secrets I've been using for my clients. Now, I figure that if I could even save you a few more dollars in tax, there's a few more dollars you can use for your family, your goals, or your favorite charity. And to be honest, I'm kind of disappointed where the government is currently headed. So let's send less tax dollars to the government and put more back in your pocket. So let's talk about Mike. Mike's a client of ours that owns 5 rental properties, pretty big properties, that bring in about $200,000 a year in rental income. But guess what? Instead of paying tax on that money, he legally reports $0 in taxable income. How is this? It's because he knows how to use the real estate loopholes to his advantage. So let me break it down. The first piece is depreciation is a hidden supercharged tax write-off. Now, the IRS will typically let you write off the value of your property over 27 and a half years for residential, or 39 if it's commercial. Now, even though Mike's properties are cash flowing and he takes home a profit, he takes a huge depreciation deduction on his tax returns, which lowers his taxable income to almost nothing. And what he uses is what we call bonus depreciation and cost segregation. So instead of waiting 27 and a half years to depreciate a property, Mike used a cost segregation study to accelerate depreciation. So on a $500,000 investment property, this is the difference between taking $18,000 a year in depreciation or $150,000 a year in the first year of depreciation. Huge difference. This allows them to write off tens of thousands or more in the first year, completely offsetting all of his rental income. The next trick is on the back end of a real estate deal, is what we call the 1031 exchange, where he could sell and pay $0 in capital gains tax. Now, if Mike sells one of his properties, he doesn't have to pay capital gains tax. He does this by reinvesting the profits into a new property using what they call a 1031 exchange. This exchange allows you to defer capital gains taxes indefinitely. Now, this only applies for investment properties, not for any type of other assets, fix or flip, or primary residences. But most importantly, let's talk about what we call the real estate professional tax status. And I think this is the ultimate loophole. Now, if you or your spouse qualifies as a real estate professional, you can use your real estate property losses to offset all of your other income, including W-2 or business income. And this is how high income earning individuals like doctors, lawyers, and business owners can use real estate to pay $0 in taxes. Now, there's very specific and strict rules to this, which I'll create a blog post below to explain it. But if you can qualify or your spouse can qualify, this can dramatically reduce your tax and magnify your wealth. Finally, let's talk about what we call a buy, borrow, die strategy, or how the rich build wealth tax-free. Now, instead of selling properties and paying taxes, Mike instead borrows against his real estate, pulling out tax-free cash through home equity loans. Now, when he passes down his properties, when he passes away, his kids inherit them tax-free with a step-up in basis, eliminating the capital gains taxes forever. Pretty neat, right? Anyway, I'm glad you stuck around to the end to learn how to utilize real estate as a tax savings vehicle and a wealth building strategy. Now, in this next series of videos, I'm going to cover in great detail some more very specific strategies that we implement with our clients to help them avoid paying too much to the government. Now, if you're like me, and you want to keep learning more ways to optimize your business and taxes, don't forget to hit that subscribe button. And if you have a tax question or a comment, feel free to leave them in the comments below. And until next time, remember, it's not about how much you make, it's about how much you keep.